In the metals quadrant here at the CME Group, gold is falling down about 0.75%. It's a critical week for gold as it turns negative on the week for a Thursday. Critical for a number of reasons, but really on a price action technical basis. You look at the weekly chart, and 2 weeks ago, that would be the week of November 4th, we saw a pretty big exodus of gold, high volume selling throughout that week. We went all the way down about $55 from the open to the close for that particular week. And then last week we rallied up a little bit, and this week turns negative again against some pretty key moving averages. It is a low volume sell-off that we're seeing this week. Today has more volume than it's had recently, but the sell-off today is dramatic as well, going against some of the short-term moving averages, pushing down from those levels that it needed to break out to have sort of a short to medium-term reversal, which it did not have. It is only Thursday. We do have tomorrow's trade. We are going into a holiday week next week where we're likely to still be lower volume. So if it doesn't recover, it becomes a critical negative week. The dollar rally today is part of the reason. The dollar fell first to new lows on the week, actually, and then rallied back pretty strongly. If you look at the dollar index, only up about 10 basis points on the high side of things, but it was the dramatically higher move off of the lows that mattered. The dollar really gained some strength after the jobless claims figures today, and after some of the optimism that we got out of Chinese officials had turned the dollar surprisingly negative, thinking maybe the Fed would ease again. Didn't turn out that way. The dollar rallied and finished the day higher, and again it was the move off the lows that mattered from the perspective of the inverse relationship between the dollar and gold, which is kind of broken down over the last few months. Today, at least, it seems to still be a little bit in effect. And commodity divergence overall in the metals. We've got a mixed bag in the metals today. Gold being lower, copper should be higher based on their normal correlations. Copper is not higher right now, and overall in the commodities, we're looking at crude oil a lot higher. So crude oil, part of the demand story, gold, part of the demand story, copper not agreeing. So watching that divergence is pretty critical. It's likely that they get back in sync. They're not there right now. Copper negative on the same day. That gold is negative is unusual.